stock is trading at around $13 a share. That's down hugely from the share prices of over $115 or $150 a share in late 2021. So does this discounted price mean that investors should buy Rivian stock for 2025? Not necessarily. There's more research that needs to be done before coming to a conclusion, which is what I'll do in this video. I'll evaluate Rivian's prospects and answer if I think the stock is a buy for 2025. Let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So you could see Rivian's price action over the recent years. Of course, in 2021, it was trading close to $200 a share based off of a lot of hype and enthusiasm for electric vehicle stocks that have since come back down to reality. Investor excitement over electric vehicle stocks has come down for the most part, except for Tesla stock, which still holds a lot of that enthusiasm and hope and dreams for what an electric vehicle company can be. Whereas most other electric vehicle stocks have come back down to reality, Rivian included, now trading down over 95% off its highs in 2021. But the lower price doesn't necessarily mean the stock is a buy. See, Rivian was sold to investors as a growth company, as a growth stock. The future of all vehicles are going to be electric, or so that was what Rivian management and Rivian shareholders want you to believe. And all electric vehicle investors want you to believe that. But that's not necessarily the case. We've seen that demand for electric vehicles is nowhere near what those forecasts were aiming for 5 years ago, 6 years ago, even 3 years ago. The reality on the ground is that electric vehicles are not ready for the masses. Therefore, a small percentage of the population, where it makes sense for them, a small percentage of the population, less than 1 out of 10 people in the world, prefer electric vehicles when they're going out and making a purchase. If you exclude China, then the electric vehicles sold as a percentage of overall vehicles is even smaller. Rivian, you can see revenue is actually declining from a peak near $5 billion in trailing 12-month revenue. It's fallen to $4.5 billion in trailing 12-month revenue. Now, Rivian is planning to launch a lower priced model in the first half of 2026, around the $45,000 price mark. And if they're able to achieve that, I think that will certainly increase revenue for the company. Whether it will do so profitably remains to be seen, but certainly it'll increase sales. But for 2025, sales are going to be tough for Rivian. Sales growth especially is going to be tough for Rivian. Interest rates are looking like they're going to be higher in 2025 than they were in 2024. Economic growth looks like it's going to be slower than where it was in 2024. Unemployment is going to be higher than where it was in 2024, all of which points to people not looking to buy $80,000, $90,000, $100,000 SUVs and trucks. And so that puts Rivian in a really tough position. They might have to cut prices significantly, which is going to hurt their margins even more. And they've been losing billions of dollars on the bottom line. Their options are limited. The deal with VW is going to inject billions of dollars of capital into the company, which is going to be helpful, but it's not going to improve the company's sales growth. It's just going to help the company sustain itself and not go out of business because of all of the losses on the bottom line. I wouldn't be surprised if this relationship with VW, this partnership with VW, turns into an outright ownership, VW buying Rivian, which could be something interesting to look out for 2025. I think that would be a good way for Rivian to get out of the mess that it's in and, help shareholders recoup some of their investments that they've lost in this company. Looking at the last 5 years, the cash flow from operations on a trailing 12-month period is troubling. They lost $4 billion on a trailing 12-month basis, and they sold about 50,000 cars. So they lost $4 billion selling 50,000 cars. It's really troubling to see these numbers. Thankfully, they are improving from the lows where they were close to losing $6 billion on a trailing 12-month period. But that's because the company made some drastic changes to the business. They paused production on their manufacturing plant in Georgia, which was going to help the company reach higher economies in scale where they can lower the cost per unit and actually become profitable. So they had to pause that because they were in danger of running out of money. Then they had to make that deal with VW, giving up some of its key technology, some of the proprietary advantages it had to give up to VW just so that it can have some money to survive because it's losing so much money every quarter, every month, seemingly every year. If you look at how much money this company has lost during business, it's now over $22 billion. It's lost in its short life as a business, right? $22 billion it's lost in doing business. And they've reached a point where they're only selling 50,000 cars annually. So to invest $22 billion, over $22 billion to sell 50,000 cars, that's not a worthwhile investment. So some of that is hidden value, such as the progress they've made in the new manufacturing plant in Georgia, the progress they've made in research and development in the technology that they've developed. Now, that technology is extremely valuable. As you saw evidence of the deal with VW, VW was willing to pay billions of dollars as an investment and partnership to get access to that technology. So Rivian's technology is very valuable. And the current manufacturing facility that they've ramped up have gotten ready to the point it is today, where it's able to and capable of producing over 200,000 units, even though they're only selling 50,000. If demand were to somehow increase, then they could ramp that up to 200,000 units sold, but demand is nowhere near the level of manufacturing capacity they have. So they overbuilt this company based on forecasts and projections they made in like 2019 or whenever it was that they were making these plans to build these manufacturing facilities. All of those estimates were way above where reality is right now. And so the business needs to right size to this lower level. And I don't know how you can do that with a company that's built for large scale. Car companies are built for large scale. You can't operate car companies profitably on a small scale. Very few car companies are able to do that, sell only 50,000 units annually and still turn a profit. I don't think that's going to be the case for Rivian. So it all hinges on the lower priced models expected in 2026 and beyond, getting to the point where they can ramp up manufacturing at the new Georgia facility, which can hold over 1 million units production. But will that lower priced model at the $45,000 price point increase sales by all that much? That's the big question mark with Rivian. Now, according to Wall Street analyst, they don't expect things to get much better for Rivian. They're expecting the company to lose $4.5 billion in free cash flow in 2024, $3 billion in 2025, another $3 billion in 2026, another $3.4 billion in 2027, and another $2.7 billion in 2028. So multiple billions of dollars of losses in free cash flow is expected to continue for Rivian at least until 2028. So the expectations are not great. So my conclusion, should you buy Rivian stock for 2025? I would say no. I would say this is still a hold. The price is much lower than it was at the highs, but still the business itself is questionable. It's questionable whether it can survive being the company that it is. And so for that reason, I still rate it as a hold. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.